Are we at risk of seeing a recession here in Australia in the next 6 months? The RBA has a very big decision on their hands. Should they increase the cash rate based on the current inflation data? Now, inflation has come down the last 6 months, but based on the latest economic data, inflation is starting to creep back up, and that means the RBA might need to act in increasing the cash rate. What this would mean would be a 14th rate rise that the RBA has made, and this will create more pressure on mortgage holders here in Australia and may send some people into receivership. This might mean more distressed sales and more turmoil in the property market, or are Australians just going to hold on for dear life and protect their house at all costs, and therefore other areas of Australia's economy might suffer? So let's jump into this article talking about the expected recession, potentially, and I'll share with you my thoughts on what you can do in your own life and your own journey to set yourself up for success, whatever the RBA does. Now, economists are warning Australia could be tipped into a recession if the Reserve Bank overreacts to the higher than expected inflation data during this meeting in the next month. The nation would already be on the verge of a recession if not for the federal government's Stage 3 tax cuts, a new report by Deloitte Access Economics says. Now, this is really interesting because what this is already saying is that we would be in a recession if it weren't for the government's Stage 3 tax cuts. So the RBA is trying to increase the cash rate and put more pressure on Australia's economy to try and push down inflation. But on the flip side, the government is working against the RBA essentially by giving those tax cuts, allowing people more money, and therefore more money flowing through the system means more GDP and potentially more pressure on prices. So the Reserve Bank is trying to dampen inflation, while the tax cuts actually increase the pressure on Australia's economy and potentially create inflation. Now, vital inflation figures from the June quarter will be released in the next month ahead of the RBA board's meeting on August 5th and 6th. So this video might be coming out right around this time when we're going to have that RBA decision. So are they going to leave the rate on hold or will they increase the rate? That's the real big question here. I actually don't think it matters. If they are going to increase the rate, it's only going to probably be by 0.25%. And that's not going to make a massive difference to mortgage holders at this point in time, given the current interest rates. If you are already paying 6.75%, moving to a 7% interest rate is not going to have a noticeable increase in the mortgage repayments that you'll need to make. It is a significant increase. We're talking hundreds of dollars here for the average mortgage. But on the flip side, if you're already able to pay 6.75%, you're pretty likely to be able to hold on at 7%. What's more worrying is if we see more rate rises before we see those rate cuts. If they get up to 7.5%, for example, another 3 rate rises or even another 2 rate rises, depending on the size of the jumps, that's where we could see some significant distress. But I think if they want to put if the RBA want to put a warning shot out on their Tuesday release after their meeting, then they may do that 0.25% increase to create more of this media storm, to create more pressure in Australia's economy, and to try and dampen that inflation. Weak economic growth and stubbornly high inflation has put Australia's economy at a fork in the road, says Deloitte. It leaves the RBA 2 choices, with both holding huge potential impacts for both households and businesses. Now, down one road, a high June quarter trimmed mean inflation result could force the hand of the RBA to lift interest rates once more in early August, further crushing household and business confidence and wiping out the benefits of the tax cuts and real wage gains in the second half of 2024. Down the other road, the June quarter inflation result may be more benign, consistent with the slower pace of growth of Australia's economy. That would see the RBA hold interest rates steady again next month, enabling households to lead a steady recovery in economic growth in 2024 and 2025. Now, there's no doubt that the politically popular decision of which fork down the road the RBA should take is just to leave rates on hold. It's not a popular decision to increase people's expenses on their mortgages. But if it's the right economic decision, the RBA should obviously go and do that. And maybe some of the decisions that the government are making in terms of their spending and infrastructure and what's going on that side in terms of tax cuts is actually impacting what the RBA is trying to do on the other side of the equation. Now, economic growth in Australia has been sluggish at best, hampered by 12-year high interest rates and stubborn inflation. The economy expanded by only 0.1% in the first 3 months of the year, bringing annual growth to 1.1%. Deloitte forecasts the economy to grow by 1% through the whole of 2024. Now, I think there's different pockets of Australia's economy are growing at different points in time. What I'm seeing on the ground here in terms of Brisbane property is a mad rush to property in 2024. We're seeing a lot of buyer demand and not enough supply. Now, we're going to expect to see more supply in this spring selling season. August, September, October is usually our busiest time here at Purpose Property as we help people secure the right property for the right price in the right location. Now, what you should do is take action. A lot of people out here in Southeast Queensland are taking action, whether they're overseas investors, investors from interstate, or local owner-occupiers looking to break into the market or buy and upgrade their family home. People are taking action. The roads are busy, the cafes are full. I'm not seeing a recession on the ground here in Brisbane. Now, it might be different in other regional or major metro markets. It just depends on the city and what's going on the ground. But here in Southeast Queensland, yes, people are feeling the pinch of interest rate rises and no one wants to see another rate rise from the RBA. If that does happen, I think the media will jump on the back of it heavily and promote people being pushed down by this economic pressure of Australia's economy and what the RBA is doing. But in reality, I think people will still battle, people will still fight to hold their home and their investments if possible and cut back in other areas. So what can you do in terms of battling these economic changes and whether we see a rate rise or not? Regardless, I always talk about liquidity. Now, Emily and I have just gone through a massive refinance of our entire portfolio. We've been working with Nevada and the team at Cube Home Loans to refinance our entire portfolio and access hundreds of thousands of dollars of equity to make future purchases and to give ourselves the liquidity or buffers in place. So that's really something that you can do to combat these interest rate rises. If you can create buffers, it's a great way to protect yourself and know that you can make repayments for the next 3, 4, 5 years. One of the ways you can do this is refinance. So if you want to have a chat with my broker, I'll leave the link down in the description below. But what the broker can do for you is allow you to pull out equity. So if you've got equity in your own home, you can pull that out as separate investment debt. You'll have your original loan on your home loan and you'll have a separate loan, which is investment debt. If you go use that debt to buy a property, that'll enable you to grow your property portfolio. The other option is just to sit on that cash and then use the remaining cash you've got as a buffer and use those as that liquidity pool to protect yourself from rate rises. So when Emily and I are looking at our portfolio, we're wanting to balance growing the asset base by expanding, and that's exactly what we've done. We're going to share with you a couple of recent purchases that Emily and I have made in the portfolio in the last few months, which is super exciting. But in doing that and in expanding our property portfolio, I'm also looking to manage the liquidity. Emily and I actually hold roughly around $100,000 buffer at this point in time to make sure that we can make interest repayments for a long period of time before being in some level of financial distress. Now, your buffer might be $5,000. I think that's what our buffer was, or even $2,000 when we first got married. That buffer will increase over time as you have more assets in your property portfolio. And as you take on a little bit more risk, you need to be able to manage those repayments. So work out whether you need $2,000, $5,000, $20,000, $50,000, or $100,000 to protect yourself based on these interest rate rises, or if these interest rates hold, that you can keep making those interest repayments for the long term and protecting yourself with that liquidity. It feels like almost every Australian has got their ear to the ground waiting to see what the RBA's decision is each meeting, but I think it doesn't matter. It's more about what you can control on your side of the fence more than what the RBA is going to do. You can only control what's within your limits. So have a chat with the right broker, have a chat with the right accountant, have a chat with the right buyer's agent if you're looking to buy a property and they can help you in that journey. If each of those parties can help you set yourself up for success, then there's value in using their services. I always talk about the value proposition, and that's one of the best ways I think people can help move forward faster in their portfolio and grow their asset base strategically by balancing the growth, the cash flow, and the downside risk of investing in property. Now, if you'd like to sit down and have a chat with myself, you can head over to purposeproperty.com.au to book in a free strategy session with myself. We'll sit down, have a chat about your situation, chat about what's going on in Australia's market and how we can help you secure a property here in Brisbane, and then leave some time for some questions. So head over to purposeproperty.com.au to book in a chat. I'd love to hear your thoughts in the comments below. What is the RBA going to do over the next few months? Are they going to see a rate rise in August or in the months going forward? And where do you think Australia's economy is heading? Are we going into a recession sometime soon? I'd love to hear your thoughts in the comments below. Thanks for sticking around. I'll see you in the next one. Peace.